Hello traders, Gary Wagner here, just about 10:40 in Honolulu, 3:40 in New York. Equities markets have about 20 minutes to go, and although they are trading well off their highs, they are trading in positive territory. Currently, Dow Jones Industrial Average up roughly 155 points. This all on Thursday, January 21st, 2016, and we're looking at trending markets as we look at the Dow Jones Industrial Average attempting to stage somewhat of a recovery after this fall from grace that has been so predominant since the beginning of the year as we look at how this market has been trading. Crude oil is trading higher this morning. Let's take a look at that. That's up about 5% on the day at 29.72. That, of course, is closed. And we're finding a very, very interesting set of data points when we look at how the market, in terms of the equity market and the S&Ps, have been trading as oil trades. And then when oil closes, of course, which is about 2:30 Eastern Standard Time, we see that disconnect taking place. What we saw today is with oil trading higher on the day, we actually had a surge taking the Dow Jones Industrial Average above 16,000. That was the high of the day, which came in roughly at the same time as oil was trading. And then we saw it soften, the equities markets, that is, soften after crude oil had closed for the day. So traders, consider this. Since the end of last year, of course, this being December 28th right in here, January 4th right in here, daily candlestick chart. But since the end of last year, when we topped out in the S&P just below 17,800, call it 17,700 and change, we have seen this market decline and decline steadily with a series of almost consecutive down days, and that, of course, is our red candles. Aside from small little blips at the beginning, an attempted rally right around the 11th day of January, and then a couple of up days, one being today, one being last week, we've not really seen any kind of real support come in the market. Now, on a technical basis, we are currently at an area that we can genuinely look for support, and we're basing this really on that August meltdown. This is the August meltdown, of course, in the Dow Jones Industrial. We'll look at it in the Standard & Poor's 500. Intraday low that was hit was 15,400. On yesterday's trading activity, we came very, very close on an intraday basis of taking that out. In the S&P E-mini, we actually, on an intraday basis, exceeded what we saw on the August meltdown. So we are absolutely, I believe, at a point in which if we are going to find this market stabilize around this area, in other words, if we're not going to go into a protracted bear market, which my personal belief is we will not, then we've got to find a place on a technical basis as well as look for key distinctions and new fundamental data that comes out that will point us to possible stability in the market and a potential turnaround, because that's what I have been waiting to play. We've not played the downside of this market, but I certainly think that there will be an extended period in which we can play the upside of the market. And to that extent, we'll take a look at the Standard & Poor's, but just very, very quickly, dollar under pressure today. You can definitely see that on this daily chart, and euro dollar in essence unchanged. So it's been a day in the currencies where they've moved around quite a bit, but in essence have moved back to an unchanged territory. You can see that 99.05, but look at the net change, in essence unchanged on the day. Same cannot be said for crude. Crude trading up about 5% on the day, 29.82 or a $1.47 gain per barrel, which is a nice move considering the kind of carnage we have seen in this market as it is traded off. And when we look at our weekly chart, let me go ahead and blow this up to the extent where you can see this candle. There we go. We are actually trading up on the week, and that's the first time we've seen that this year. We'll see how it closes, but it does appear as though we could see this market actually close higher on the week, these being our prior weeks in which we've seen the market open and then close lower, trading to new lows that we had to go back multi-year lows, that we had to really go back to about 2003 to actually hit these lows that we saw once the market broke below 27. And you can see these lows at the lower end of $26 per barrel. As you know, my call was that we could see on an intraday basis market move as low as 25, and collectively I think we've actually hit that mark. So we'll have to see how it trades over time. But let's take a look at the Standard & Poor's. And what we talked about with this particular market was the fact that when we compare this to the August meltdown, we have this intraday low. It comes in at 1831. Of course, market's at 1871 right now. It is recouped quite nicely, but just as we talked about with the Dow Jones Industrial Average, this market has been just characterized by a tremendous sell-off in the market. We have seen this market trade to lower pricing throughout 2016. This is our marker for 2016. Selling really started at the end of 2015. However, the one thing that we did do in terms of technical assessments is that we did breach the intraday low that we hit during that August 2015 meltdown, but at this point we have closed higher. So these are the first indications that I'm absolutely looking for to find a potential point to enter into the market. Now, in terms of resistance areas, we had another resistance area right here, roughly at 1860. We're well above that at 1871. We certainly have taken out the 1831 price point, and our next real target in terms of potential resistance has got to be about 1900. And I think that if we see this market recoup over the next day, meaning the end of the week here and into Monday, of course, I think that midweek we will probably enter a long trade in the Standard & Poor's 500. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the wrap up and review. Bye.